because I did honestly announce this super late, so I didn't expect that much people to join. But either way, this is going to be recorded. It's going to be posted on the YouTube as a live stream that everybody's going to be able to rewatch. First day was kind of like last minute. I'm like, I have the motivation. I'm going to do this right now. And then other people will obviously start tuning in as the days go by. I'm going to keep track of everybody that joined early. So I'm going to take attendance right now. Just make sure I remember who joined in first. And you guys will get a little special something at the end of this. Okay. Oh yeah, I wasn't muted. I was on a phone call with Chris. What is this bootcamp overview or headlines? What does that mean, overview or headlines? This bootcamp's a concept bootcamp. I'm going over ICT concepts, like everything you need to know to be successful as a day trader using ICT concepts. Because obviously I am trading ICT concepts, so I'm starting from the foundation on day one, going into deeper concepts, how to do everything, and then everything is also going to be recorded, and then you guys will get a slide at the end of this meeting, or at the end of the 7-day bootcamp. I'm gonna be finished with this slide that I started. Boom. So I just started setting this up. I'm thinking I might format it in a different way as well, more like this. So you guys will see that in a minute. Or actually, you guys couldn't see that PDF. Okay, just 2 more minutes, guys, and then I'm gonna get started. Ali Raza has raised his hand. Is this going to be recorded, Mark? Yes, it's going to be recorded. I'm already recording. I'm live on YouTube. So once I end the recording, the live stream, it's going to be posted on YouTube automatically. Overview or headlines for how many days, sir? It's going to be a 7-day bootcamp. It's not going to be back-to-back, just whenever I can make the time. And typically I'll try to do it at the same exact time every single time I host one of these. So around 5 o'clock. Okay, we got some more people joining in. Let's get started. Can everybody hear me all right? Upload these on your YouTube channel. Yes, they're going to be uploaded on the YouTube channel. Bro, how do you avoid taxes in US? You don't avoid taxes. You can spend the money that you earn, and as a result, you can write off the expenses that you have as tax. You're not going to get taxed for the stuff that you purchased. But you can't avoid taxes completely. You can just spend your money and then write off the stuff that you spent your money on, so you don't have to pay taxes on that money. If you decide to keep the money that you've earned, then you're going to have to pay taxes on it. What's up, everybody? What can you do about traders who still at 35 on the challenge? I told everybody that if you're like lower than the balance that we're currently at, you just use a lower lot size. So if you're at $35, don't use 0.02 like us. Don't add extra positions. Do one position, do 0.01, and once we take a few profitable positions, you'll be back up to 50, and from then on, you'll just be slightly behind us, but you'll still be able to keep up. You'll still be able to take trades. Just try not to trade on your own. I mean, I'm not sure why you're at 35. Did you just miss a few trades? Okay, let me also send this out on Instagram. 1 second. Feel free to hit me up with any other questions in the chat right now while I'm finishing this up, and then I'll get started. What is your YouTube channel name? Let me send you the link right now. There you go. Full Send Traders on YouTube, same as the Instagram. Okay, is everybody ready? It's 5 in the morning here. I'll see this on YouTube. Have a great weekend, everybody. Thank you for tuning in either way, Ali. Okay, let's get started. So first of all, for those of you that don't know anything about ICT at all, what is ICT and how can you take advantage of, like, oh, I also have to restart my OBS screen. There you go. I think for now I can get rid of this. Okay, so what is ICT? ICT is a set of concepts, and there's a specific dude that teaches ICT on YouTube. So if any of these concepts I don't specify like in clear depth and you want to learn more about it, you can search up ICT on YouTube and you'll be taken to the Inner Circle Trader. This guy has a huge page, 1.8 million. You can see that this dude teaches these concepts. I learned from him. That's how I am aware of these concepts. These are concepts that I learned from this guy. Now, he does ramble on a lot. I'm not going to be as like boring with the stuff that I'm teaching here. But you can learn everything. I learned by following his playlists. I studied the 2022 mentorship, then the 2024 and 2025 series, just like a little bit. And then eventually, at some point, I just stopped watching him because I realized I knew the concepts. And like, you don't need to constantly be learning new stuff. What you need to do is learn the basic foundational stuff, hop into the market that you like trading. Because obviously ICT, he's from the USA. I'm from the USA. For me, Asia session works, right? A lot of you guys are from the UK or from other countries, and your time zone is at a different time. So if you can't trade the same pair that I trade, if you can't trade at the same time that I trade, then you choose something that you can trade. Like UK traders, you can trade the Great British Pound, any pair with that, or you can trade any of the indices. You can trade those during a time that works for you and apply these concepts to the pair that works for you. Your trading should not be a model that you copied from somebody else. It should be using these concepts that the market like follows. These are like rules that the market follows. There's an algorithm that follows these stuff. And you learn this stuff, and then you apply it in the way that you like seeing in the market. So whether it be trading the lower time frame, the higher time frame, you obviously have to learn how to manipulate time frames. Like start from the higher time frame, go down to the lower one, figure out which one has the right gap that you're going to use. So without further ado, that's what ICT is, and let's hop into day one of the 7-day bootcamp for ICT. So first of all, the first concepts that I'm going to be covering: liquidity, fair value gaps, inversion fair value gaps, order blocks, kill zones, immediate rebalance, the Reaper fair value gap, market structure, and then I guess I'll also add to that. I'm gonna get rid of this one and just do. I'm still gonna teach it. I just think that this is more important. Time frames. Actually, no. I'm not gonna cover time frames. I'm gonna do that in day 2. So time frame is one of the most important things, but in order to actually know which time frame to use, you have to know this main concept right here. And this is called the fair value gap. So I'm starting from the very basics. Even if you think that you already know most of these concepts, you can still learn something from me, because I've seen these concepts for the last 5 years. I have different understanding of what happens in different scenarios. And I can tell you guys that sometimes even when it closes and respects a fair value gap, it can still run through it. And I'm going to show you everything that you need to know about fair value gaps. So first of all, starting with the very basics, you have to use TradingView. So how do you actually get started in trading in general? So in order to view your market, so choosing a pair, there's various different pairs on here. You can trade gold. XAU USD is what I trade. I chose gold because it works during Asia session. It's the safe haven asset. For those of you that don't know, the U.S. economy has been pretty bad recently. It's been going down. The U.S. dollar, which is found as DXY on TradingView, you can use this TVC chart, has been falling. You can see on the monthly time frame, we have been falling. And that's because the dollar is getting weaker. And when the dollar is getting weaker, this is Forex, a Forex pair. And it's the same with futures, except you're going to be trading a different name, but it's the same markets, essentially. So Forex and futures is essentially the same thing, other than small details like the spreads. Futures has no spread. Forex has spread, which means you enter a position, it might place you slightly higher than where you entered. And then a lot of other things depending on the prop firm and the broker that you're using if you're trading with live accounts. So Forex.com is the chart that I use because it's going to be very important to use Forex.com charts. I feel like these are the most respected charts. This is also what ICT told me to use, Forex.com charts. And ever since I've started using Forex.com charts, it's made a big difference than when I was using Oanda. Right here, Oanda. It will look completely different on the lower time frames. Oanda's not going to hide the gaps, and it's going to look slightly different. The fair value gaps are going to be slightly off. And when I used to trade on Oanda instead of Forex.com, there would be gaps that would be closed below on Oanda. It would close below this gap. And when it closes below a gap like this, I'm like, okay, it's disrespecting the gap. Now price is going to run down from this gap. But instead, price would run up anyways. And at some point, I realized it wasn't because the gaps weren't respected. It's because I was using the wrong chart. And while this was happening on Oanda, on Forex.com, it didn't actually run through it. It closed inside of it. And that's a big, important, game changer. When you are using the wrong chart and it's showing you that a candle closed below and making you think that it's going to go down, when in reality it didn't actually close below on the chart that actually matters. So make sure that you're always using the Forex.com chart no matter what pair you're using. Now, if you're trading indices, you're not always going to be able to find a Forex.com chart. Like if you're trading crypto, for example, you're not going to find a Forex.com chart. Let's actually see. Okay, there is a Forex.com chart. So make sure you're just always using the Forex.com chart. And in the case that there isn't one, just shoot me a message and I'll figure it out for you. That's the first thing, okay? TradingView. This is where you're going to choose the pair that you're trading, and this is where you're going to see everything. So diving into the first concept. Let's also hop into some of the indicators that I use. So one of them is ICT kill zones. So that's what you'll see right here on the top of my screen. The kill zones. Asia session, London, New York. You're going to notice this is one of the concepts that we're going to cover. This is sessions. So this is when the money is moving in the market. Now you'll see on gold, there's typically movement in every single session, right? But sessions are super important if you're trading a pair, like I said earlier. If you're not able to trade a pair that works in every time zone like this, you choose a pair that's specific to a certain currency, like NASDAQ. NASDAQ is specific to the US dollar, so it's always going to be moving during New York. The biggest moves are always going to happen in New York. While during Asia session and London often, it's not going to be moving. It's going to consolidate and move sideways, just like this. you do not want to be trading inside of consolidation, which is one of the things that I'll be going into. Power of 3, which is also another one of the concepts that I'm going to be covering, and one of the indicators that I use. So if you scale out to the 1 hour time frame, you'll notice that you're not seeing the indicator for the sessions anymore. That's just because on the higher time frame, like think about it, a 4 hour candle, you don't really need to know when the session is if you're on the 4 hour time frame, right? And on the 1 hour, it's harder to see. 30-minute, now you can actually like spread out and see the session. Okay, so when do each session start? Each session starts, Asia session first of all, is the first session of the day from the new daily candle. So I'll show you what I mean by that. After I show you the indicator that I use that shows me the daily candle on my right hand side of the screen. This indicator is called HTF power of 3 by 2 degrees. HTF power of 3. And it's going to give you this daily candle. You can click on it, time frame 1 day. So you're on the lower time frame, like 30-minute right now, but it's going to show you what's going on the daily time frame. You can see right here. This is how the daily candle looks. This candle right here shows me the 1 hour time frame when I'm on the 30-minute time frame. So you can see right here. This is a 30-minute candle. Let's go to the 1 hour. Boom. This is how the 1 hour candle looks, right? So that's what this candle is showing me. So this is just to keep track of the 1 hour candle on the lower time frames. And why is that important? Because I feel like 1 hour time frame is a very important time frame. And just like the daily candle, every time a new candle opens, a significant candle like the 4 hour or the 1 hour, you're going to want to know where the open of this new candle is. And then you're going to want to, if you're bullish, you're going to want to trade longs from below the open of the candle. And same with the daily candle. If you're bullish in today's day, for example, you're going to optimally want to enter below the open. So you can see right here, this is the open of today's daily candle. If you were to get into your entry below the open inside of the wick, that's the best possible entry that you can have in the entire day. So knowing this candle, where it's at, and kind of finding that higher time frame direction will give you entries that you can literally hold. Like if you get in right here, you can hold throughout the entire expansion of the daily candle. Everybody following so far? Bro, I love you, Mark. Say hi to Chris. Okay, I will do that. Where are you located, bro? I'm located in San Diego, California, in the United States. ICT kill zones by, let me show you. I just mentioned that it's by 2 degrees. Oh, ICT kill zone, sorry. The indicator. Reflow FX. So you search up ICT kill zones, Reflow FX. And all this stuff will be recorded, so if you can't get it right now, you can go ahead and scroll back through the live stream and then find this spot where I'm showing that. Okay, so I covered the indicators that I'm using, and now let's dive into the sessions. Each one of these sessions has their own characteristics. I'm not going to go into that just yet. That's going to be in a more advanced day. But each one of these sessions, when do they start? So the session, Asia session, after the open, what I was going to show you, after I showed you the indicator, is, let's go back to the 30-minute time frame. You'll see why I said Asia session is the first session of every new daily candle. That's because look right here. This is the previous daily candle. It's a bearish daily candle. You can see we opened, we ran up, and above the open, melted and closed. So once New York session ends and the volatility dies down, a new daily candle opens. This is a new daily candle. So from here, this was Thursday. Now we're inside of Friday's daily candle. It doesn't say Friday until midnight, but this is already Friday's daily candle. So you can see right here, the first session is Asia session. We're still Thursday, but look, we're a few hours later. Yeah, so it shows on TradingView that the new day starts from midnight, which is 12 o'clock in New York time. My charts are in New York time. That's just because ICT was always in New York time, and I memorized when each of these sessions starts in New York time. So I just stuck to that. My actual time zone is Pacific Standard Time Zone, so right now for me it's 5 o'clock. In New York time, that would be 3 hours ahead, 8 o'clock. So you can see right here, Asia session is the first session of every new daily candle. That's why I love trading Asia session. That's why I'm able to catch huge moves, and you guys are wondering how I'm able to hold my trades. Because in New York session, you can't hold your trades for a long period of time. But if you get into Asia session, you can hold your trade throughout the entire expansion of the daily candle. As long as the expansion starts in Asia creates the wick, and then expands towards buy side. If Asia session is a fake out move where it runs up into some confluence and then runs down, then you're obviously not going to be able to hold throughout the entire daily range. But I'm talking about in specific days where Asia session's the low of the day, it runs up, and that's when you close, right? There you go. So you would have been able to close during New York session as a bullish daily candle right there until bang. Right, so today's daily candle would have been a great opportunity for you to hold below the open, expand. But you guys get my point. Asia session is the first session of every single new day. Then it's London, and then it's New York. New York finishes the day, and then the daily candle closes, a new one opens, then it starts from Asia session, London, New York. Okay? Now, what times are the sessions at? Asia session starts at 8 p.m. EST, and it goes until like midnight, 12 p.m. London session starts at 2 a.m. and it goes until like, I don't know, 5, I'd say. And then New York session starts at 7 a.m. and it goes until, I feel like New York session is the biggest session because we have like the opening at 7 a.m., which you can see on my chart. It says 8 a.m., but it actually starts at 7 according to ICT. So New York session open, then we have silver bullet at 10, which I'll cover as well in one of the future days. Then we have lunch hour at 12, and then we have PM silver bullet, which is at 2. But I'd say New York session, like you mainly have to know when the session starts, and you want to give yourself like a little gap. Like, I'm not sure if this is exactly when the session ends, right? The session ends when the target is hit. That's what you have to know. Like, I'm not sure if this is the exact time when it ends. I'm just giving like 2-hour period between every single session. So you can see that London, you have 2 a.m. to 5 a.m. and then there's like 2-hour period. And the reason why I'm giving you this 2-hour period, let's just say until 12 p.m. And the reason why is because this is lunch hour. You do not want to be trading lunch hour. You can start trading again from PM, New York PM session, which is at 2 p.m. And all of this is in New York time zone, okay? New York time zone. On your chart, that would be UTC4. So if you do UTC4 and then you add this indicator, it should automatically show you when each session starts. Okay, guys? So the reason why now you do not want to be trading in between sessions is because it will consolidate. The opening of every session is typically very fast. It's very fast. When every session opens, it is very fast. There's a lot of volatility. And before that, like for example, a new daily candle opens somewhere around here, and it doesn't essentially move, a big move, until the actual session starts. And it's the same thing with every session. In between the session, it will always consolidate. It will do something choppy and trash. And let me show you some more examples. Right here, London ends, New York session starts. In between that, it was literally just moving sideways. In between London and Asia, once again, look, bearish daily candle, or bearish 30-minute, bullish 30-minute. It's not moving in a specific particular direction with volatility. So you want to avoid trading in between sessions. You want to trade at the open. You want to trade at a good time. And when the session ends is when your target gets hit. You want to get very familiar with the daily candle and finding the narrative on the daily candle, which I'll go into in the next day when I'm going to be covering the daily power of 3. So make sure you guys are tuning in for that. Let me check any questions. Do you use any other brokers for reference or only Forex.com? I don't trade with Forex.com as my live broker. I just use that one as the chart that I mark everything out on. I don't trade on it. This is just the chart that I use for direction, finding the daily narrative, and knowing where the market is going. Okay? Any other questions? Feel free to send them in the chat. I will review them whenever I think about it. Okay, so kill zones, I would consider that one checked off. You guys know the times, you guys know what you should watch out for, and when you should avoid the kill zone. So kill zone's typically the first opening hour of every single session. So from 8 p.m. in Asia to 9 p.m. We got New York from 7 a.m. to 8 a.m. Then we got, actually there's kill zone. The kill zone in New York that ICT talks about is silver bullet, which is at 10 a.m. I'll cover that. I'll cover that in another day, like specific times that are optimal to be trading. Okay, next concept, liquidity. Liquidity is a super simple concept. Now let me get rid of all this stuff. Liquidity is highs and lows. So essentially you see a high right here, that is liquidity. You see a low right here, this is liquidity. A new low, this is liquidity. Another low, this is liquidity. This is liquidity. You see a high right here, this is liquidity. This liquidity was taken out right here. You have a low right here, this is liquidity. This came and took out this liquidity. Now we have new liquidity right here. We missed this liquidity down here, created a higher low. You can see it's a higher low. We have a low, higher low. Once again, we didn't run down. We created a higher low. We once again failed to sweep it. We created a little bit of a higher low, and now these lows right here are relatively equal lows. So you can see right here, two lows just around the same level. This is a very high, like very targeted area by the algorithm. The algorithm loves running for liquidity like this. Now, how does liquidity actually look? Or how does it work? Liquidity, when it's taken out, as you can see right here, when we run up above a previous high, we're taking out sellers. So imagine at the very highs, like when you guys take a trade, where do you place your stop loss? You don't always catch the high. In fact, most of the time you never catch the high. Unless you like have a gap somewhere, you trade off of that gap. Like right here, we had a 1 hour IFVG. If you were to trade from the 1 hour IFVG, you might have caught the high. But most of the time, we don't catch the very high. We see it start running, and that's when we catch it after like a market structure shift. So let's say we get in right here. Where do you place your stop loss 90% of the time? So if you're targeting this low, where are you going to place your stop loss? You're going to place it above the highs, right? So what liquidity is where everybody's stop loss is at. Everybody's going to be placing their stop loss above the high, like or at the high, because you're not expecting it to go up above the high. And liquidity is basically taking out liquidity. It's taking out previous people's stop losses so that new sellers can enter the market if the market wants to go down. If the market wants to go up, then it's going to take out buy side liquidity. So this is sell side liquidity. Actually, this is sell side liquidity. This is buy side liquidity. All the sellers are here, and then we take out this buy side liquidity, which means we took it out by running to it with a bullish move. And then sell side liquidity, we sell to it. Essentially, all the seller stop losses are up here. It takes it out. New sellers enter the market. Then we target the lows. When the lows are taken out, it runs up. And this is how the market works. It runs on liquidity. It takes out a high, and then it will run down from this high. It takes out a low, it'll go up from the low. Like if we're bullish, it'll constantly take out a low and then go up from that low. Like even this little move, even though we wanted to run down, when we took out this low, we ran up. And this is a pretty big move. Like I'm on the 1 hour time frame. If you were to catch from this low to the close of this 1 hour candle, you caught a good trade right there. That's a solid move. Okay, guys? Here's some built up equal lows. You can see that we created a higher low right there. We didn't take out the low. And later when the market came down and took out these equal lows, it ran up from there. That's a very good target to use. Okay, liquidity, which means that we're taking out previous buyer, all these buyers right here. Whole bunch of buyers, they didn't close their position. They wanted it to run higher. They wanted it to run all the way up here. They didn't close their position. It ran down, took out all of their stop losses, made people start selling. Like now we got a bunch of people selling and putting their stop losses up here. So now new buyers will enter the market right here, and it will go and take out all these new sellers. That's how liquidity works, guys. Okay? Everybody following? Everybody following? Let's see some messages. Come on. Drop some messages in the chat. I want to see you guys. People who are joining in on YouTube, drop some comments on YouTube. Let me know you guys are tuning in. I want to see your names. I want to see your faces. Come on. Beautifully explained. Okay, awesome. Awesome. People are following along. Let's keep moving. So, let's put a check on liquidity. That's how you trade liquidity. Boom. marked off liquidity. Next, fair value gap. So fair value gap is going to be a little difficult to get your head around and start seeing it for the first time. So one of the things that I always recommend to new students that I take on is to use another indicator. I'm a big fan of indicators, just not the random lines that you use, right? The random EMAs, like those, useless. I'm just telling you guys. Don't get offended. I think they're useless. You don't need to. If you have a good understanding of fair value gaps, candle closes, time frames, you do not need EMAs. Okay, keep it simple. Use fair value gaps to just show you the concepts until you can see them with your own eyes, and then you don't need to use it. But this is a fair value gap indicator. Let's take a look at what it's marking out. Here we have a fair value gap. So what is a fair value gap? Where does it start? So if you use this indicator, let me show you guys what it's called. FVG by Nephew Sam. Okay, Nephew_Sam. You just gotta search up FVG. It'll pop up. Okay, guys. One of the most famous indicators ever. And a fair value gap is between 3 candles. So we got 1, 2. That was sloppy. 2. Oh my goodness. Oh my goodness. I need an artist. We got artists in the chat. Oh my goodness. Okay, we got 3 candles right here. Oh my goodness. Boom. Okay. We got 3 candles. Each candle has a wick, right? Boom. We got wicks on these candles. Boom. We got some wicks. Fair value gaps are between the candles. So here we have the high of the lowest candle in a bullish fair value gap. I'm showing you guys a bullish fair value gap. Probably should have made these green, but they're red. So we take our fair value gap from the lowest candle. This is such a tongue twister. We take our fair value gap from the high of the lowest candle of the move, okay? So from the high of the lowest candle to the low of the highest candle. 3 candle range. So we have 1, 2, 3 candles. That is our fair value gap right there. Okay, guys? You take a box, the square, and you mark it out. FVG. Now, how do you know how to see these fair value gaps? When do the fair value gaps not form? Let me show you. If this candle right here, the wick, drops a little bit lower like this, then isn't the high of the fair value gap a little bit lower? Because it's to the low, you see? To the low of the candle. So what if the wick of the top candle goes even lower? Okay, fair value gap gets even lower. Now what if the first candle's wick was higher? What if this first candle's wick was right here? Then our gap gets even smaller. Now, what if it was even higher? In fact, it overlapped with the other candle. Boom. We do not have a fair value gap right there. This, in fact, is called a immediate rebalance, which means that the third candle comes down and makes sure that no new fair value gap forms. What is an immediate rebalance? That's another really important concept. It's one of the most powerful concepts, in fact. Like, I love immediate rebalance. If you were to ask me what my favorite concept ever was, boom, this one right here. Immediate rebalance. Okay, guys? Now, let's get back into fair value gaps. What do you see right here? Honestly, there's a little gap right there. I think it was just too small for the indicator to mark it out. But that's almost an immediate rebalance. But there's still a gap. So this gap is still relevant. Let me show you what an immediate rebalance looks like. Okay, right there. We got 1, 2, 3 candles. Normally, right, if the wick of the top candle was up here, we'd have a gap. But you can see that the top candle's wick came all the way back down and made sure that there was no new gap that formed right here. This is called an immediate rebalance, okay? This is where there is no fair value gap. Got it, guys? Immediate rebalance. Another thing, you can see that this candle is bearish, and then we have bullish, bullish. Doesn't matter what color the candles are. No, it does not matter. It can be a bearish candle, a big bullish candle, another bearish candle. It will still form a gap. Let me show you. Let me show you. I want to see 2 bearish candles, 1 bullish one in between. Okay, perfect. Right here. Bearish candle at the top. 1 big bullish candle. You can see that this is still a bullish fair value gap. Right here, we ran into it the first time right here, and then expanded higher. Ran into it the second time, still respected it. We did not close below it. And you can see the indicator still showing this gap. You guys know if it disrespects this gap and closes below it, the indicator will not show the gap. Okay, guys? Everybody following? How do you trade for value gaps? Simple. You wait for it to tap back into the fair value gap. You see it respecting it by either closing inside of it or it fills it up and comes back up. You can enter after it fills the gap, touches back into it. If you have a higher target, for example, we missed something right here. Let's say we have a higher time frame gap right here. We're on the 1 hour time frame, but we have a 4 hour gap right here. For example, there is no 4 hour gap here, but let's imagine that there was. And we missed it the first time we came up here. And then you see, oh, market just created a bullish fair value gap. We missed this 4 hour gap. We have a bullish gap. I see market come in, fill this up, and start moving back up. I'm like, okay, this is a bullish fair value gap. I'm going to hop in right here and target this 4 hour gap that we missed. And that is your first lesson on time frame alignment. If there's a 4 hour gap, you missed it, you get a 1 hour fair value gap. You use the 1 hour fair value gap to target the 4 hour one. Simple. That is how 90% of my trades work. That is how I get my bias. Everything comes from time frame alignment with gaps. Everyone got that? Check, check, check. Let's go. Getting it so far, bro. Let's go. Tried selling at the low daily bearish fair value gap on gold today. Thought I was going to get cooked. Or thought I was going to cook, but got cooked instead. We can cover that later as well. But as we learned that when a candle exceeds the consequent encroachment of the fair value gap, the price most likely not respect this fair value gap. That's not true at all. It's not true at all. If it runs through the middle, consequent encroachment means the middle. He's saying if we run through the middle, it's showing that we're not respecting it. But I don't think that's true at all. That's not how you should think of it at all. Think of fair value gaps as magnets. When there's a fair value gap that has not been touched yet, but there is a fair value gap, it's a magnet. Price is going to want to run down and fill it up. Even if it fills it up completely. You can see we left a little area on this gap right here. You can see how tiny this little area is. We came down, filled that up, because we wanted to move higher only after filling the rest of the gap. It's a magnet. When we leave an inefficiency right here, how do fair value gaps form, first of all? Fair value gaps form because there's so much buyers right here that there was no sellers at all. So right here, you can see there was still a little area where there was only buyers. And then we came down with sell side, sellers, bearish candles, filled this up, and then continued higher. Got it? When we continued higher, one of the concepts that you could have used, you're like, okay, how do I know when to get in after a fair value gap? You use immediate rebalance. You're like, okay, we're running up. Okay, a new fair value gap is going to form. Let me show you guys. Look, when the new candle opens, it's going to open right here. Right? It's going to open right here. Think about it. If the new candle opens right here, it has a little wick like this. It opens right here, and it continues higher and closes. What is going to form? A new gap is going to form, right? But if the candle comes down and fills this up, no new gap is going to form, and it can just keep running higher. Because think about it. If fair value gaps are magnets, which means that it pulls price to it, then if we're going to run up, why would we leave a magnet down here? Why would we leave a magnet for price to then want to come back down? If we want to run up higher, we're not going to leave magnets. We're going to try to rebalance every single new gap that forms. Whoops. Dang it, that threw me off. But you can see that it ran up after it rebalanced that. So let me figure out where I was at right now. That was a really beautiful fair value gap. There you go. So what I was saying right now is right here, the next candle opened. There would have been a new fair value gap if it just ran up and closed. But it came down, it rebalanced it, and off the rebalance, you see it start moving back up. You're like, bet. Let me get in real quick. I saw that it already filled this gap. So there's no little inefficiency that it's going to run down to. So this is a good spot to put your stop loss. You get in off the immediate rebalance, put your stop loss below this fair value gap low, because it already filled it up. It's not a magnet anymore. Target the highs. Boom. Beautiful execution. One and done. You have a model right there. Got it, everybody? I was on the wrong chart. But you can see right there. Bang. Beautiful. Immediate rebalance, runs higher, creates a new gap. Typically, if we're running on buy side, we're going to constantly rebalance. On the daily time frame, there was one beautiful rebalance on the daily that I was like, damn, I just wish I took this, guys. I wish I took it because I was here trading this day right here. It came down, it rebalanced it after running from a bullish IFEG, which I'll cover right now in just a second. It tapped into the bullish IFEG, it rebalanced, and then it started running up, bro. That was generational wealth that I missed right there, guys. It could have ran up right here from my entry 1 bajillion pips, and I would have been a millionaire. Bang. Bajillionaire. Generational wealth, and I missed that trade right there. So keep your eyes peeled. One of the trades that I did take, I remember this trade. This was a 12K payout. You guys can find a YouTube video on it. I always do trade recaps when I get huge payouts. Boom. Immediate rebalance on the monthly time frame. You can see it ran down. Let me scale this down to the lower time frame just so you can see how beautiful this is, okay? I literally took this trade, monthly wick. Okay, let's hop into this month right here. This is April, so May is the month. Scale down. Right now, if it would just close right here, then it would create a new fair value gap. It doesn't want to create a fair value gap because gold wants to run higher. So you'll see we run down inside of this month, fill this previous month wick literally to the pip. It fills it, instantly turns around. I get in right here, I layer in a bunch of positions, and I start holding it. Bang, 12K. You guys understand? Immediate rebalance is an insane concept. One of my favorite concepts, the concept that has paid me the most out of anything that I've traded so far. So make sure you guys know that concept, study it. Immediate rebalance. Check. Fair value gaps, you guys know how fair value gaps work now? Check. What's next? IFEGs. Okay? IFEGs. How do IFEGs work? So if the candles come and close below a gap, the indicator will no longer show it. Okay, let me show you a gap that got closed below and the indicator no longer shows it. Here, we have a bullish gap right here. It closed below right here and it no longer shows it. Why? Why does the indicator no longer show this gap? Why do you think, guys? Because when it closes below, it disrespects this gap, okay? Disrespected, which means that now it's no longer a FVG. It's an IFVG. It flips around. This was a bullish gap, but when it closed below, it became a bearish gap. Now this is a long period before it came back into it, and price wanted to run higher, but you can see we respected this as a bearish gap. Let me show you another one that actually got respected when we were running down. Okay, let me show you another one. Okay, we're running down right here. Let's see a bullish gap. Wasn't much bullish gaps that got disrespected. Here, perfect. Okay, we get a bullish gap, right? Bullish gap right here. Why does the indicator no longer show it? Because now it's a bearish gap. It closed below this bullish gap, and now it can use it to go down. That's why the indicator doesn't show it anymore as a bullish gap, because now it's a bearish gap. IFEG. Same exact way that you use a regular fair value gap. When it comes back into it, taps into it, you see it start running down because there's a target somewhere down here. You take a position off the gap. You see it start running, it fills it up completely, put your stop loss above the high, and you're chilling. Got it, guys? Simple. You guys know how FVGs work. You just got to flip it around whenever it gets disrespected. That's called an IFVG. Bang. Done with that. How's everyone doing? Hi, I'm from India. Can I learn? Yes, you can learn from the beginning. Go after it, brother. Your dreams await you. Your call ends in 14 minutes. Okay, guys. I ain't paying for premium. Okay, so this call ends in 14 minutes. We better start moving fast. What 3 candles do you choose when trading? How far back do you go to check the fair value gap? Until it gets disrespected. A fair value gap will survive as long as it's still respected. What 3 candles do you choose? The ones that form a fair value gap. If there is an immediate rebalance, there's not going to be a fair value gap, so you don't use those 3 candles. We take entry from order block that came after a fair value gap. We haven't covered order blocks yet, so you ain't taking no entries from no order blocks, okay? No order blocks. Nah, I took that daily immediate rebalance. Insane. I'll share on Discord later. Bet, Ismail. Share it on Discord. Let's see that. But it's only valid or high probability if there's a present FVG nested on a lower time frame. No, immediate rebalance is valid as long as the overarching bias is bullish. If it wants to run up, then you get an immediate balance on the daily or on the 1 hour, 4 hour. Take longs, bro. That immediate rebalance, sometimes it wicks a little bit lower. Most of the time, it's just going to keep running up. Okay? Let me put myself up there. Pin. Boom. Just better for the stream as well. Okay, we got like 9 minutes left, I think. If anything, I'll cover these in the next one. I'll find a different platform to do these calls on. I love Google Meets though. All right. So order blocks, Reaper, FVG, market structure. Market structure is a big topic. I'll just exclude this from the first one. Let's cover Reaper. Okay, guys. So imagine that there's a fair value gap that got disrespected. This is now an IFVG. What is a Reaper? What is a Reaper FVG? A Reaper FVG is if it comes back above it, you can still use it. Can you believe that, guys? You can still use it. Now, when do you use a Reaper FVG? Which means that it used to be bullish. Now it turned bearish when it closed below. Comes back above, it turns bullish again. You can use it as a bullish gap. You only use a Reaper FVG if no new gap forms. Because think about it. If it runs above it like this and then forms a new fair value gap, why would you use the Reaper down here? That wouldn't make sense to me. You use the new fair value gap. That's more relevant. If there's a bunch of immediate rebalances and clearly price does not want to make any new gaps for you to use, that's when you can use the Reaper. It's still going to respect it. It's actually going to be draw to this level. Whenever you see a bunch of immediate rebalances, but there's a Reaper fair value gap somewhere, it's purposely doing that so that price will use the Reaper and then go higher. Got it? Very quick one. Let me cover the last one too. Order blocks. Order blocks is the highest bullish candle in a bearish move. So in a bearish move, this is the order block right here. You can see it's a singular bullish candle. It comes down below the low of this candle. That is now an order block. You can use this to take sells from it. There's an indicator that you can use for order blocks. Order blocks, nephew Sam. Okay? Use this to train your eyes on order blocks. Let's see what the indicator says in an order block. Right here, you can see lowest bearish candle of this move. You get a bullish candle, then 2 bearish ones. You use the lowest one as your order block. Okay, guys? Let's look for some new order blocks. You got to be where price is at right now because it already disrespected a lot of order blocks. Scale down. Let's see some order blocks, guys. Okay, I'm not sure why the indicator isn't marking them out. It should be using them right now, but I'm not sure why. Okay, there you go. I guess it's only marking out the bullish ones. Bearish candle comes up above the high. Now this is an order block because it's a 3 candle range. If it's a singular candle range, all it has to do is come up above the singular candle. But you can see right here, it's 3 candles. Right here, this is a singular candle. Once it comes up above the high of this one, that's a bullish order block. It respected this bullish order block. You can see right here. Let me mark this out. You see how it's marking it out from the high of the body? Look at this. From the high of the body. It came down and it respected this order block perfectly. That's how order blocks work, okay? This meeting has come to an end. That's the end of day 1 of this bootcamp just because I didn't know that Google Meet only had a 1 hour timer. But we are coming to an end here. Let me read the chats real quick. Hey Marky, let me thank you for the opportunity. I was wondering if you can record these sessions so we can come back again and learn. Please and thank you. I am recording them. I'm live on YouTube right now, so all of these meetings will be recorded. Make sure you guys drop a sub on this channel. That's where I'm going to do it. Is this bootcamp every day or only on weekends? I'm going to do 7 days. whenever I can do them. Okay, guys? Optimally, I'd hope to do them during Asia session, so probably going to be on weekends whenever I don't have to live stream. But I talked with Chris. We're probably going to start doing these together around like 11 a.m. Pacific Standard Time Zone. So around that time, you're going to catch us doing these. I'll let you guys all know. It's not going to be consecutive back to back. Okay, it's going to be whenever I can do them. I make some time for this. I prepare the content for this. And at the end of this bootcamp, you guys will get this PDF. I'm going to include everything that I cover as images inside of this PDF. And then I'll send it to everybody that was joining from day one. You guys will get this at the end of this session. If you guys have any questions, be sure to hit me up on Telegram, Instagram. I answer all my DMs. Surprisingly, I have no life. I answer all my DMs. So be sure you guys aren't scared to reach out to me. Any questions? If you guys are trading with a live account, use my broker, GatesFX. If you guys are trading with a prop firm, let me know what prop firm you guys are using. I may have a code with it just to show some love. I'm doing this for free for you guys. Thank you all for your time and tuning in. And I'll catch you guys in day 2. Yes, sir. No, thank you guys all for joining in. Let's keep it going. First day, I announced it very last minute, so I'm surprised we still got like a decent amount of people in here. Next few days should be a little more packed. So make sure you guys are getting a spot. There's 100 people limit on these calls. We only got like 20 people in this call, but 100 people is nothing, guys. We're going to get that soon. Once people start seeing the value, and I'm going to keep doing these as like a series. 7-day bootcamp here, 7-day bootcamp here. We're going to do these very consistently. All right. Peace out, everybody.